Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Hi, folks. This is Susan and Mike from the Armstrong Advisory Group, and we have a brand new guide this month, Understanding Changes to RMD Rules. Mike, what are RMDs?
Yeah, starting with the basics here, if you have basically any sort of retirement account, the IRS has a rule that has changed a lot over the years that says you must start taking distributions out of that retirement account at a specific age. It varies depending on when you funded it, how old you are, but those are the basics, that at a certain point, the benefit of that tax deferral starts to be looked at and taxed, and the IRS wants you to start taking mandatory distributions from those accounts.
They want to get their money from you, for sure. Okay, so how do you figure out when you need to take those distributions out?
That's the complex part, because this has changed a lot over the last decade. So a few years ago, the age used to be 70 and a half. A lot of people have that fixed in their mind. It was then changed to 72. Today, your required minimum distribution can be anywhere between age 73 and age 75 for your traditional retirement accounts. Remember, too, that there's some complexities when it comes to your 401k versus just an IRA. There can sometimes be distributions required from each of those types of accounts rather than aggregating them. So definitely want to talk to a tax expert or financial planner when looking at all this.
Folks, we have a lot of details about how you can figure out when you need to take your RMDs in our brand new guide, Understanding Changes to RMD Rules. You can request a copy online at armstrongadvisory.com or call 800-393-4001. That's armstrongadvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead. Get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Vonner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit DAV5K.Boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning and welcome back to the Financial Exchange. It's a Thursday here, the day before the weekly jobs report comes out. We had our initial jobless claims earlier this morning, some private payroll data yesterday, and all eyes will certainly be on that Friday jobs report tomorrow as investors trying to deal with a massive surge in interest rates recently and figure out where this economy is trying to land. It's Mike Armstrong, Paul Lane, and Tucker Silva with you this morning. And our, at least our first story of the day is just a market recap over the last few months here because it has been a bit of a wild ride. S&P 500 sold off by approximately 5% in the month of September, has continued that trend downward so far in October, and most importantly, the yield on the 10-year Treasury has surged in recent months. Paul, I don't know if you have it right in front of you, but as of a couple days ago, we were as high as 4.8% on the 10-year.
We're 4.73 at the moment.
So, yeah, we are continuing. Again, it's been bouncing around, but in that 4.7 to 4.8 range here, which is the highest level we've seen on long-term Treasuries since 2007. Yesterday, at least, you had a bit of a rebound in stocks with tech shares pushing the S&P 500 higher, and that's been the story all year. The NASDAQ, tech-heavy NASDAQ, through this year, through the end of September, was up more than 20%, whereas the Dow Jones Industrial Average finished September, bringing the Dow Jones negative for the year, and so it has been a highly concentrated story this year of a few tech names really rebounding and pulling markets up. And that has been shaky, really, since mid-July when we started having these rate discussions. That narrative has been a little bit on shaky territory, and you've seen, the NASDAQ, like most other major indices, coming on down recently.
Yeah, to me, the story has really been interest rates over the course of the last couple of weeks. Ever since that Fed meeting, it seems as if investors woke up and finally realized that the idea of future rate cuts, or this idea that rates would retreat from these highs heading into 2024, was not as likely as they once previously thought. An idea that you and I and other hosts here had pushed back against when in these financial news pieces they had mentioned the idea of rate cuts. After that meeting, it seemed as if everyone got the picture and said, okay, we're going to see rates higher for longer. And the phenomenon that's occurred recently has been even more puzzling because, to be clear, the Fed, when we're talking about raising interest rates, they're raising the short end of the curve, meaning the overnight lending facility between financial institutions, between banks. That is typically tied to your variable lines of debt, such as home equity lines of credit, money markets, things that we talk about. The longer end of the curve, the U.S. 10-year Treasury that we're speaking about right now, the Fed does not have direct impact on changing those rates. Their policy changes on the short end can have a trickle-down effect, but really what we've seen is a very significant sell-off, to Mike's point, and that means a lot from a borrowing perspective, whether you're looking at mortgages, auto loans, businesses looking to finance their debt. That's why it's very significant, and it bears a lot of time for us to harp on and really take a look at that.
Yeah. So, Paul, you brought up multiple things there. I'm going to focus on one of them, which is interest rates have shot up on the longer end of the curve, for probably a variety of different reasons. And actually, this is funny to say, but it actually remains a bit of a mystery. I know all of us are tempted to point towards the Fed's commentary, but quite honestly, nothing out of the Fed has changed since mid-July. So my take is that some other things have started to change, and we're going to dive in there and talk about that a little bit later in the program. But the result is clear. Right, like the cause is a little bit opaque. Why have rates moved suddenly? What is it going on? What does it mean for deficits? Has it been purely expectations about the Federal Reserve? Has it been oil prices, inflation expectations? What's shifted over the last 60 days? I think is a good question. But to your point, the results are clear. Right, mm-hmm. When you have interest rates higher to this point, you have everything getting impacted, and that's why. In part, at least, equity markets have been selling off. I was listening to an interview with, I would mispronounce her name anyway, but she's the head of B of A Merrill Lynch Quant Strategy, and
Savitra is the first name, I think. Yes, yeah. I'm not even going to try the last name, but I got the first name for us.
Good for you, just knowing that name right off the top of your head.
I might have worked there.
She was clearly a very intelligent person, and I didn't listen to the full interview, but the point that she was making was that the S&P 500 this year, taking a look at it, investors are nervous. It's pretty expensive, 20 plus times earnings right now, depending on which measurement of PE you use. PE is the price of stocks versus the earnings that they generate. But you take out the top 7 performers, and suddenly the rest of the S&P 500 looks pretty reasonable at 15 to 16 times earnings. And I keep hearing these things, and I bring it up because they can be so easily misinterpreted. Yes, you are right. If you take out NVIDIA and Apple and Facebook and a few of these top S&P 500 companies, the rest of the S&P 500, in a lot of cases, does look fairly reasonable price. You get an average of 15 to 16 times earnings if you take out some of those top performers. However, if you take out those same 7 top performers, then you probably haven't made any money in the S&P 500 this year. And so it's easy to get distracted by these things and allow them to convince you that, hey, market looks pretty cheap. And it's true. Like if you're going out there and buying individual companies, there are plenty out there that on a historical basis do not look crazy expensive. But if you're using that as some sort of justification to buy the market and say, well, S&P 500 looks expensive, but look how many companies don't look that expensive. Well, you're kind of missing the point there, and I worry that people get that confused. This market, even today with the pullback that we saw in September, on a historical basis, is still relatively expensive compared to other times, and relatively expensive especially when you look at times with interest rates being as high as they are right now.
Two things to add there. The S&P 500, if you look at those top performers that we're talking about, the 7 or 8, if you peel those out, and to go back to your point of it looks cheap after that, well, you're pulling out 25% of the weighting of the S&P 500, because if you look at the weightings of those companies, Amazon, Apple, Google, they're in and around 5% each, and if I extend the list further, you're talking about a quarter of the S&P 500 that you're just stripping out. Oh, it's cheap. If you take out 25% of it, you can't do that. It's they're the biggest contributors, which has benefited the market this year. So that's one point there. The second point would be on a valuation standpoint, particularly if you're looking at it from a near-term perspective. Small caps look very cheap at this moment from a historical standpoint. If you look at the macroeconomic environment, and again, I don't know where things go from here, but it's not the best environment for small caps. You have interest rates rising. Oftentimes, small caps have a heavier weighting to the financial sector, which is directly correlated to rates. And you also have companies that need to borrow a lot more than the Googles and Apples of the world who sit on billions of dollars in cash. So I just mean that they're more sensitive. So yes, they may look cheap. That doesn't mean you might not feel some more pain over the course of the next year or so. Typically, when you're looking at valuations and PE multiples, they're a good predictor of long-term efficiency of returns, but the next 12 to 24 months, who knows?
Yeah. Sometimes things look cheap because they deserve to be cheap. To Paul's point, I've heard the same argument made about European companies for the last 20 years. Like, oh, man, European stocks look so cheap compared to American stocks right now. What does that mean? Well, what it meant is that they underperformed for the next 15 years. So I might be exaggerating that slightly, but not by much. And price is not always the end-all, be-all. Let's take a quick break. I know we got a little bit technical there, but we have a lot to talk about when it comes to interest rates. And it is really at this moment in time the only real thing that matters to markets. And so I want to dive in a little bit more about what this might mean for the Federal Reserve and really what it means for markets and just the everyday American right now when you see rates spiking like they have. Quick break. We'll be right back with more on the Financial Exchange.
Wall Street's volatility continues as the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network. Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead. Get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com. Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction. It can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. So call Cushing & Dolan today. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Required minimum distributions are a critical part of your retirement planning. The laws regarding these distributions has changed with the passing of the Secure Act 3 years ago, which means if you don't withdraw the proper amount when you're supposed to, you could face a 50% tax penalty. Hi, this is Susan Powers from the Armstrong Advisory Group, and we don't want you to make that mistake. Let us help you learn about RMDs and how they work so that you can avoid these tax implications. Our firm has a brand new guide available right now called Understanding RMDs. In it, we'll walk you through the steps of calculating your RMDs so that you withdraw the right amount at the right time. Call us today at 800-393-4001 and get your copy of this new free guide, or request it right now from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Only an equities crash can rescue the bond market, Barclays says. Not exactly what you're cheering for. The point that they are making here, if you're reading this article and trying to navigate it, is that when equity markets crash, people tend to pile into treasuries as a safety trade, and regardless of what people might say about de-dollarization or foreign governments getting away from the dollar, that is still likely to occur in the event of global market and economic uncertainty. Investors pile into treasuries once again, and what's been happening recently is that there's been, plain vanilla here. You want to explain the price increase or the yield increase on treasuries. It's been that there's been more sellers than buyers on treasuries, and that has driven prices up. And if you see a reversal there because equity markets crash, then you would expect likewise for yields to come down because people are piling into those treasuries. The question that I don't think anybody's prepared to answer, and I haven't seen anyone try and guess at, is when is this sell-off in bonds going to stop? Where are we going to hit on the 10-year treasury? And I'm also very interested to hear the Fed is going to say, look, we don't control the long end of the yield curve, but to some extent they do, right? They're tightening. They are selling off bonds themselves and contributing to some degree to the rise in longer-term yields. And so undoubtedly Jerome Powell is going to be asked about the move in yields and what it means for their overall strategy. Quite honestly, I think the only answer you can have is that the rise in yields over the last 60 days has probably done some of the job of a rate increase without the Fed needing to do a rate increase.
It has been extremely helpful to them for what their objective is, which is to keep rates elevated to slow down economic activity. And we mentioned before this dynamic where they don't have direct control over long-term rates. They can only dictate the short-term side of things. So this, as sort of we talk about it as a challenge for consumers out there, it's exactly what the Fed wants. They want to have borrowing costs increase and thus drive down economic activity. What is so difficult with rates, I've learned with rates and energy, and we were just talking about between the break, those are the two things that you'll kill yourself trying to predict where it's going to go or all the different factors. It's hard to pinpoint one or another. However, it's important to focus on it because it is really critical for the economy. It's just so hard to see what factors are really making things move at a given time. Yeah.
So, we have another Fed meeting on November 1st. Right now, the Chicago Mercantile Exchange is pricing in a 76.4% likelihood that they do nothing at that meeting, keep rates exactly where they are. I tend to agree. I think with the move up in long-term yields, which is now making mortgages far more expensive, credit cards far more expensive, auto loans, everything is really driving up based on these higher yields. It is unlikely to me that the Fed needs to do anything here other than just convince the American public that they are vigilant about inflation and willing to raise rates further if they need to. But I really don't see a financial need for them to go higher after this point in time with rates having moved up as much as they have. It very much, as Bloomberg points out, calls into question their ability to avoid a recession and land that soft landing that they've been talking about because let's just face it, the higher rates go in general, especially longer term rates, the likelihood of recession climbs. And so that's certainly what we are experiencing right now. And I'm concerned about it. I think everybody, if you see, there's only really one way to read all this is with rates climbing this significantly, it could mean more economic pain for some.
It's just incredible, Mike, how quickly the dynamics on the rate discussion have changed. We're used to the last 15, 20 years in conversations, whether it be with clients or just investors in general, you were not able to get any type of yield on your money markets, on fixed income. And inflation was something that was really never discussed. And if it was brought up, it was because we couldn't get it over 2%. And here we've sat over the last year or so with high rates, and now people seemingly starting to believe that we could be in a rate of higher interest rates for a longer period of time.
What I am very interested in right now is the new alarm bells being rung about the deficit. So I'll be the first to come out and say that I have called into question those alarm bells over the last 20 years. And frankly, anybody that started, whining about deficits and, the Tea Party, many others who started focusing on deficits over the last 20 years and saying that it was going to cause financial calamity, they have been proven wrong over and over and over again. The United States government's ability to borrow without financial consequence has been really one of the defining factors of the United States financial markets over the last 20 years. It's once again being called into question, and I'm not going to jump onto the alarmist bandwagon here. I know the statistics as much as anybody else does. I think the total deficits now amount to something like $90,000 per each individual American, if you take a look at it in that way, which is a dumb way to measure it, but nonetheless, it's out there. It does start to call into question with rates high, with deficits as large as they are, and frankly, with a complete lack of serious political willingness to talk about deficits and address them in any meaningful way, you start to actually think about, okay, how does this progress? How does this get resolved, right? If both parties, which they have over the last two administrations, dramatically increased the deficit, both parties have publicly pledged to not touch Social Security, not touch Medicare, and not raise taxes on most households, what exactly are you left with? Because your borrowing costs have just doubled in a very short period of time, if not gone up more than that. And so what is the solution? You know, we are seeing moves in interest rates that are usually reserved for much smaller countries with much bigger financial and economic problems. And so are we on the start of something that could be more concerning when it comes to the deficit?
It's really concerning. It's an issue that we should continue to talk about. However, it's anyone's guess when this comes to a head. I think everyone can agree it's problematic. It just becomes to a point in time, when does the global economy start to question the U.S.'s ability to pay back its debts? And that's anyone's guess. But there's mounting evidence, and this has been the case for a long time, but the further that you kick this can down the road and don't take any action to resolve the deficits that we're running at, you can see how it becomes more problematic, particularly if we are going to be in this higher rate interest rate environment, because that means your debt obligations are going to increase. And Mike, I think you made a great point honing in on just these three pieces. If you look at the revenue that this country generates versus what it spends, it's a $1.5 trillion deficit. In order to make significant cuts to what we're spending, the three things that you have to focus on is cutting Social Security, Medicare, or increasing taxes. That's not a cut, but that's how you get some of the deficit under control. Defense is another one. I feel like there should be a drinking game at home of how many times I've said that that's 65 to 70% of the budget. If you're not going to touch that, think about your household budget. You're not going to cut 70% of it. It doesn't leave you a lot of space to cut. No politician wants to go near this.
Are you encouraging a drinking game for a radio program that airs at 10:27 in the morning?
I'm in. Get a late start.
You know, it's been a long
Degenerate Tucker's jumping out again. First it was Korean baseball betting Tucker back in the pandemic. Now it's 10:27 a.m. drinking game Tucker. I like it.
With my son this week and how sick it's been a long week for me, so maybe I should just spike my coffee and just fire myself up.
He's already fired up on the cough syrup, so now it's going to be the real syrup. But on the other hand, when I read an article that compares the United States to Mexico or Greece, it's tough to take anybody seriously in that regard. We aren't. There is no country out there. The only group that you can really compare to when it comes to deficits and steadiness would probably be the European Union, which isn't a country, which is a different set of circumstances. And so when I see comparisons to the financial situation of other countries, it's tough to make the argument serious. Quick break. We're going to have Wall Street Watch when we return.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Veterans Development Corporation is proudly partnered with this year's DAV 5K. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV and the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead. Get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Yeah, IRAs are difficult to deal with, but many options. The best option generally is if you're married, husband and wife, whatever, the spouses can be each other's beneficiary. And that's how you normally do it. However, if you happen to be over or at age 73, which is the required beginning date for minimum distributions to come out, and you're doing estate Medicaid planning, and you have an irrevocable trust, you can also have a testamentary trust built into your will. If you do that and you meet those two requirements, then you can name the estate the designated beneficiary of your IRA. And under the new Secure Act 2.0, it allows you to do this without causing adverse required minimum distributions, and it will allow you to protect the assets immediately from the nursing home for the surviving spouse and shelter it for estate tax purposes all at the same time.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary by calling 866-848-5699. That's 866-848-5699. Or you can request your copy right at their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are in negative territory slightly following yesterday's bounce back, where we saw the NASDAQ rally nearly 1.5% and the Dow snapping its 3-day losing streak. Investors continuing to closely watch the direction of bond yields and eagerly await tomorrow morning's big jobs report. Right now, Dow is off by 21 points. S&P 500 is down by nearly 0.5% or 19 points, and the NASDAQ pulling back after yesterday's rally, down 0.2% or 88 points. Russell 2000 is mostly flat, up by 1 point. 10-year Treasury yield is mostly flat, now at 4.73%. And crude oil pulling back again today, another just over 0.25%, now at $83.96 a barrel. So well off of the $90 mark we've been accustomed to seeing lately. One day after issuing weaker than expected guidance for the fiscal first quarter, Clorox shares are down by 8.5% after the cleaning products company said the cyber attack it suffered back in August will result in a sales plunge between 23 and 28% for the quarter. Clorox also said it will end up with a loss in the quarter rather than the estimated $150 million in profit. Furthermore, Raymond James downgraded the stock to market perform from outperform following the disappointing guidance. Meanwhile, Rivian shares are down 17.5% after the electric vehicle maker announced a $1.5 billion convertible bond sale. The company also announced discouraging third quarter guidance, expecting between $1.29 and $1.31 billion in revenue, where analysts anticipated $1.31 billion. Rivian also reported its cash and short-term investments declined between the end of the second and third quarter. And ExxonMobil shares are down by 1% after the oil giant said it sees operating profits for the quarter in the region of between $8.3 and $11.4 billion, mostly in line with analyst forecasts, where about half of which will come from the group's main oil and gas business. Several other oil producers are also seeing minor losses as a result of the recent pullback in crude prices. I'm Tucker Silva, and that's Wall Street Watch.
We've been talking about a lot of the market ramifications of rates hopping around here. I think the most front and center one is that the average 30-year mortgage rate has now been up over 7.5%, according to Bank Rate, for a few weeks now, and might be even approaching 8% now. There are a lot of other implications, though, too, when we look around. So, one, on the mortgage space, I was interested to find that the rates are varying widely, and upon reflection, that makes all the sense in the world because the banks in this country are of dramatically varying health at this point in time. So some of them are, itching to make loans because nobody's refinancing, and so they want that business. Others are, just doing what they can to take on deposits and have no interest in loaning out new funds. But there's quite a bit of variation if you go and shop around right now when it comes to mortgages, apparently.
Yeah, there is a wide gap, and that hasn't really been the case in this low interest rate environment that we've been in. We've seen that houses, in terms of what they cost to the average American, it's reached the highest level since 2006. It now takes 44% of the U.S. median household income to cover annual payments tied to a median-priced home. So not only is there a potential negative impact when you have just higher mortgage rates at this point, but there is some variation in terms of what you can get. It's all about what the appetite for the lender is. The other impact that these rising rates have is tied to pension lump sums. I think this is something that comes up as well, where if you are working in a job that has a pension and you may be offered a lump sum opportunity, what will happen is as interest rates go up, that value of the lump sum will go down. It's an inverse relationship, and that can be very difficult for people to get their arms around. Another sort of spin-off impact of the higher rates that we're seeing at this time.
Yeah, it's been surprising to me. I've actually, just over the last few weeks, I'm sure this is just a localized thing that I've been dealing with, but I've actually seen a few lump sum buyouts from pensions that surprisingly looked attractive to me. But, it's an important thing to evaluate. And I think very often, Paul, I think there's a big temptation when a company throws a big number in front of you to say, hey, this is what we're willing to offer you as a lump sum. You look at the, $500 a month you're getting, and you say, wow, that's a lot of that money right up front. But you do really have to measure it. And to your point, those lump sum offers these days should look a little bit less attractive with interest rates higher where they are.
Yep.
It even impacts weird things. I talked about this in the program before, but all these record jackpots that we're seeing on Mega Millions and Powerball is all because of higher interest rates. And we have not dealt with this in really a generation of investors, right? If you're a millennial, you have no idea what higher interest rates really mean for. I mean, you can go and understand what that practically means, but you certainly haven't invested with higher interest rates at any point in your life in all likelihood. You haven't bought a home with higher interest rates. It is a very different set of circumstances that people are dealing with right now, and it brings up all sorts of questions of what is the real intrinsic value of an asset when interest rates are suddenly 3% higher than they were just a short time ago. What this ultimately comes, I know we talk about the market impact of a lot of this stuff, and that is what's front and center because every talking head on radio, TV, or anywhere else wants to talk about how the market swung one day to the another. But honestly, far more impactful for most people is the financial planning aspect of this. Of what does it mean for the next new car that I buy or the next home that I buy, and how do I evaluate the risk of being too exposed to interest rates? Does an adjustable rate mortgage make sense now? How should I be paying off student debt? How should I be planning for my kid that's going to college soon with rates being this much higher? Those are the types of questions that, quite honestly, I find to be really impactful to the folks that we work with here at the Armstrong Advisory Group. And if you have questions like that about how rates are going to impact the future of your situation, we'd love to talk to you. The number at Armstrong Advisory Group is 800-393-4001. We also have a lot of good information out on our website. We put out monthly guides every month, but you can check that out at armstrongadvisory.com. But if you'd like to talk to a real live human being, again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Governor Maura Healey just signed on Wednesday the $1 billion tax package, putting it into law, and I quickly want to run through the highlights on this in terms of who it impacts because there's a little bit of something for just about everyone. Unfortunately, from a total economic competitiveness standpoint, I don't think it does much of anything to counteract the millionaire's tax that went into law this year as well. But there is compared to before we had this bill at all, there is something in there for just about anyone, whether you're high net worth, whether you're just scraping by. There's a little bit of something to help people along here. Again, I'm not going to say that this does much to make the state more competitive, but for anybody taking care of family members in one way or another, it increases the dependent tax credit, whether it's for children or seniors or anybody. There's a little bit of extra tax revenue coming in for the people in that situation. What else was a highlight to you, Paul?
The big deal here is from an estate planning perspective, they did increase the Massachusetts estate tax threshold from $1 million to $2 million. We're one of the few states in the country that has a state estate tax. I think it's
13 states now.
Exactly. Yeah. And then it was us in Oregon that were at that $1 million threshold, which quite honestly was very outdated. If you look at the median home price for a home around the greater Boston area, you're getting close to $1 million.
$900,000 now for the median home price in greater Boston.
So it really doesn't take you very much to have in terms of other assets to get to that $1 million level. So I think that's a really important point to make is the estate taxes in Massachusetts. That will be helpful. And then the other one is for short-term capital gains. Massachusetts had this crazy punitive short-term tax for capital gains that was at 12%. So at the federal level, when you buy and sell a security in less than a year, it is taxed at ordinary income rates. At the state level, what Massachusetts said is in addition to your federal taxation, we're going to tax you 12%. They brought that down from 12 to 8.5. Quite honestly, still 5% would have been better. 8.5 is still quite high. But at least it's a little bit lower, I guess, if you want to look at it from a glass half full perspective.
I agree. Those are the key items in there. But like I said, there's a lot in this tax bill. There's stuff for renters. There's specific things in there for seniors, which I have to say that of the focus, I feel like a lot of it has benefited seniors in Massachusetts who have felt an obligation to leave over the years, quite honestly, because of the penalizing tax situation. There's a new credit in there for commuters who use public transit, buses, ferries, regional transit, homeowners with septic systems or lead paint. There's stuff in there for them. So quite a bit in here. including tax credits for dairy farmers. That was one that I definitely overlooked, as well as some sort of tax benefit for cideries. So if you want to open a hard cider company in Massachusetts, then we're going to benefit you for some reason, I guess.
Lower tax rate on hard booze, I guess.
Yay. Quick break. When we come back, I want to talk about the story that is going to just make me furious, but we have to talk about it, which is the lack of development of a big multifamily housing situation on the South Shore. We'll be back with that next.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Required minimum distributions are a critical part of your retirement planning. The laws regarding these distributions has changed with the passing of the Secure Act 3 years ago, which means if you don't withdraw the proper amount when you're supposed to, you could face a 50% tax penalty. Hi, this is Susan Powers from the Armstrong Advisory Group, and we don't want you to make that mistake. Let us help you learn about RMDs and how they work so that you can avoid these tax implications. Our firm has a brand new guide available right now called Understanding RMDs. In it, we'll walk you through the steps of calculating your RMDs so that you withdraw the right amount at the right time. Call us today at 800-393-4001 and get your copy of this new free guide, or request it right now from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction. It can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. So call Cushing & Dolan today. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of Consumer Cellular single-line 5GB data plan with unlimited talk and text compared to lowest cost single-line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead. Get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com. The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's DAV 5K is coming Saturday, November 11th at Fort Independence at Castle Island. Registration's ongoing, but spots are going fast. You still have time to join us, so go to dav5k.boston and help support these great American heroes. That's dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation.
If you've listened to the show for long enough, you've heard us kind of rail against local politics, especially when it comes to zoning issues and multifamily housing on this program quite extensively, and we just have, quite honestly, the perfect story to summarize what's been going on across the country here. So we're going to have the opportunity to pick on Braintree here. Apologies to those who live in Braintree and object to what we're going to say next, but this is just the perfect example. And look, plenty of other communities, Weston, are guilty of the exact same arguments, but here's what's going on in Braintree. Braintree has a tax rate of 9.72 per $1,000 of valuation, and as of August, according to Redfin, the median home sale in Braintree was $780,000. What that means is that approximately, if you look at that, if you assume that that's the appraised value, which it never is, then median property tax bill in Braintree is coming to $7,500. Braintree is fortunate enough to have a lot of commercial property in there to help subsidize some of the tax bill, and one of the big ones being the South Shore Plaza, the big shopping mall. The South Shore Plaza around it apparently has a bunch of very underutilized parking lots. And
a lot of empty spaces.
Apparently a lot of empty spaces there, which is another story we've covered. The United States in general has like 7 parking spots for every registered vehicle in the country. But the owner of the South Shore Plaza was looking at what to do with it and said, hey, we're going to sell this off to a real estate developer, a pretty big one, ZOM. I think they've developed, big apartment complexes and commercial properties across the country. And as we have seen, whenever there's a big real estate development out there, it drew a ton of attention. The town meetings got filled with people objecting to it, and this thing's now dead in the water, it appears.
It's really frustrating. Those people who are protesting it better not be the same people who are sitting in a camp complaining about the affordability of being able to live in and around this area, because your actions are just completely contradictory to if you share that viewpoint. And I think we can almost get bipartisan approval and agreement that around the greater Boston area, homes have gotten too expensive, and it's just become too much of a hurdle for new home buyers to climb in order to make these purchases. In order to get it better under control, you have to increase the supply side of things. It seems as if we could probably agree on that theory, but no one wants it in their backyard, as is often the case with these housing development projects. But to me, just reading through the proposal, $800,000 in yearly tax revenue that would have stemmed from this project, that helps subsidize, you'd think, your property taxes and would create just more housing supply. It's frustrating that this is the case. I'd be interested if anyone lives in that area. Maybe I'm opening myself up to getting beaten down here, but text us at 617-362-1385 with just your thoughts on the development. And I guess it's squashed at this point, so there's not really a whole heck of a lot to talk about.
Yeah,
it's frustrating.
Done. It's done. And, I don't live in Braintree, so I'm not going to be impacted by the traffic nor the new people that would move in. It was a 495-unit apartment complex. 180 would have been reserved for seniors. Like Paul mentioned, $800,000 in estimated yearly tax revenue for a town, by the way, which is not in the greatest of financial health. Mm-hmm. Braintree has been consistently outspending their tax revenue in recent years. The problem's bad enough that the school system went underfunded in the last budget cycle. Town councilors have signaled their support for the project, hoping they would help with the revenue slide. So my take on there, one of your main taxpayers is a shopping mall where there was a deadly shooting last year.
There's been a couple there.
So, if that's what you want to rely on the stability of the shopping mall to pay a bunch of your property taxes, and subsidize your town's tax revenue, which is already in a bad financial situation, right? You're already outspending what you are bringing in. And this was one of, in my mind at least, a pretty reasonable solution to that $800,000 of tax revenue per year coming in. That's now off the table here. And there's only one logical solution here to me. Like, raise your hand, Braintree counselors, if you're going to cut school funding and cop spending. Probably not, especially you can't cut cop spending when you've got shootings occurring at the South Shore Plaza. I was kind of wondering why I was at Dave & Buster's in Braintree the other day and there's a cop standing at the door the entire time we were there. I guess that adds up as to why. But you're going to have tax revenue going up. Your property taxes are going higher. Your property values, great, are probably going to go higher too because there's no development in there to deal with the amount of people that are moving in. What was the number? I think 4,000 people have moved into Braintree over the last couple of years, and they've only built about 700 housing units, so clearly demand is outstripping supply. But the most frustrating piece of it is most of the stuff that gets brought up about this, it's just bold-faced lies and scare tactics, right? There was somebody that stood up in the meeting. Tucker pointed this out, and they're saying, oh, we've got a school nearby, so it's probably going to attract a bunch of pedophiles.
Like what?
Excuse me?
What are you talking about?
That isn't ridiculous. The most bogus, not in my backyard argument I've ever heard. Like, yeah, we should never build any houses because it increases the likelihood that a pedophile might move in. Are you kidding me?
Wow. I mean, what are your thoughts?
What serious human being makes that argument?
Well, also, what are your thoughts? And this is in reference to the Boston Globe article, but the Civic Association President Kelly Moore rejected the idea that the region's housing shortage is a crisis. What are your thoughts on that?
Look, I guess we're getting into the nuanced definitions of the word crisis, but how much income do you need to have to buy a home in the greater Boston area? It's in excess of $100,000. So define it however you want. I don't care about whether you define it as a crisis or not. And Braintree, you're not the only town to blame here.
It's across the country.
This is across the country and across the Massachusetts area in general. But this aversion to multifamily housing is just... The arguments against it, in my mind, are unrealistic, impractical, and scare tactics, and I think it's just bogus. So, there we go. No housing in Braintree. Get ready for your tax rates to go up. Quick break, but we have a lot more to cover in the second hour of the show. We'll be back on the Financial Exchange.
Hi, folks. It's Susan and Mike from the Armstrong Advisory Group, and we have a brand new guide out this month, Understanding Changes to RMD Rules. Mike, the rules for RMDs are different when it comes to inherited IRAs. How are they different from your own RMD?
Yeah, so your own required minimum distribution generally starts in your 70s with a few very limited exceptions on your traditional retirement accounts. When you get into inherited, you have a lot of different paths with a lot of different rules. So I guess starting off first with the most basic is if you leave your IRA or your 401k to a spouse, it's pretty simple. They treat it as their own retirement account, or they have the option to, and the RMDs are based on their own age. Where the complexities start getting into is when you leave them to a non-spouse. Here, there is an entirely new set of rules that was just changed in the last few years. It applies both to traditional and Roth retirement accounts, and the rules are actually so new that the IRS has not yet issued permanent guidance on how this is all going to work. But the general theory here is that you're going to need to empty out that retirement account within 10 years with a few limited exceptions. Where the IRS is still issuing some new guidance is around how much you'll need to take out every year during that 10-year window. And so we'll see where that goes over the next few years.
There are certainly more complexities when it comes to an inherited IRA. You can get the details by requesting our guide, Understanding Changes to RMD Rules. You can do that at 800-393-4001 or request a copy online at armstrongadvisory.com, 800-393-4001 or armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I enlisted in the Marine Corps when I was 18 years old, joining a long line of family members who also served our country. After my service, I connected with the VA healthcare systems, where I attended meetings with disabled veterans and learned for the first time about the DAV. I was so impressed with the work they do to help millions of veterans, including providing necessary services like transportation, education, and financial opportunities. Today, I stand a proud partner of the DAV in the 2023 DAV 5K. My company, Veterans Development Corporation, is a general contracting firm working with many disabled veterans, and I hope that by sharing my story, many other disabled veterans will be able to reach their goals once they conclude their service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for the impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code 52023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code 52023. Plan your dream vacation right now. That's visitusvi.com and use code 52023.
Finding great candidates to hire can be like, well, trying to find a needle in a haystack, but not with ZipRecruiter. Its powerful technology actively finds and invites qualified candidates to apply to your job. So while other companies might deliver a lot of hay, ZipRecruiter finds you the needle in the haystack.
See why 4 out of 5 employers who post a job on ZipRecruiter get a quality candidate within the first day. Try ZipRecruiter for free at ZipRecruiter.com/free. That's ZipRecruiter.com/free.
At Consumer Cellular, you get the same exact coverage as the largest carriers, but for up to half the cost. Same thing, up to half the cost. Up to half the cost for the same thing. 50% the money for 100% the same thing. I hope I'm making myself clear. Consumer Cellular. When freedom calls, we're here to answer. Call us at 1-888-FREEDOM.
Half the cost savings based on cost of consumer cellular single line 5 GB data plan with unlimited talk and text compared to lowest cost single line postpaid unlimited talk, text, and data plan offered by T-Mobile and Verizon May 2023.
Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home, and by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing & Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. Call 866-848-5699. Or you can request the guide online by visiting our website at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The federal government has changed the way we deal with required minimum distributions. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and these changes could have a major impact on your finances if you don't calculate your RMDs properly and take the withdrawals at the right time. You may choose to withdraw more than the minimum amount, but you should understand the potential impact if you do. It's also important to factor RMDs into all aspects of your financial strategy so that you have the ability to manage your taxable income now and in the future. Call us today at 800-393-4001 and get a copy of your new free guide called Understanding Changes to RMDs. That number again is 800-393-4001, or you can request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by taking part in this year's DAV 5K. For more information, visit dav5k.boston. The DAV 5K Boston is proudly presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome back to the Financial Exchange. It is Mike Armstrong, Paul Lane, and Tucker Silva with you on a Thursday morning before a Friday jobs day. If we take a look at tomorrow, we'll be seeing the U.S. employment report at 8:30. Currently, the median forecast is for 170,000 jobs created, an unemployment rate of 3.7%. That compares to 187,000 and 3.8% in the previous month. Quite honestly, what this market is looking for is some confirmation of what you saw in the private payrolls data that came out on Wednesday, which showed a slightly lower number in terms of private employment. But that's what they're hoping for right now. Bad news is good news because every piece of good news seems to be confirmation of rates going and staying higher. In terms of markets today, you've got the 10-year Treasury sitting at 7.33%, pretty much unchanged today. Dow, S&P, NASDAQ all in negative territory. NASDAQ leading the way down off about 138 points, 1.05%, but the S&P close behind 0.8%, and the Dow off 0.5%. And then oil has been sneaking its way downward here, actually. I know we've been talking about, OPEC price cuts and how much higher gas prices might be going, but we spiked back on September 27th. We hit a high on am I looking at West? Yeah, I think I'm looking at West Texas crude here of $94 per barrel. Hold on. $93.68, and we have since come, I'm not going to call it plunging down because it's not that big of a change, but a good 10+% down to where we are today, which is just shy of $84 per barrel. Anything else catching your eye in markets, Paul?
No, the oil piece to me was surprising just because of how quickly it reverted back. It still looms as a potential negative impact to inflation, which we'll get into. But other than that, it's the U.S. 10-year Treasury that's the biggest story, and what we'll see from the jobs report that we really need to continue to keep our eye on.
National average for gasoline prices, according to AAA, $3.70. I'm going to round here, 77 cents for a gallon of regular diesel, coming in at $4.55. That's about actually a little bit less than where we were a week and a month ago, and about in line with where we were a year ago, but obviously has been showing some inflationary pressure over the last few weeks. Maine coming in at 375, New Hampshire at 364, Massachusetts 373, Vermont at 379, Connecticut at 378, and Rhode Island, if I can hover around your tiny state, coming in at $3.68 per gallon. The other big news of the day, however, is not so much a Northeast story as it is a West Coast story with Kaiser Permanente Union walking out. Some 75,000 nurses, pharmacists, and other employees of the Kaiser health system walking off the job on Wednesday in the largest U.S. healthcare strike ever.
This is significant. It's supposed to be lasting for about 3 days here, and the reason for the strike is they're negotiating a new contract, but particularly they want more focus to be done on the staffing shortages. A lot of employees are just burned out and feel that there is not appropriate coverage for them as healthcare employees, obviously coming off the heels of the pandemic, where I think every healthcare worker will tell you they were stretched incredibly thin, and there's been a lot of people in the healthcare space that dropped out of that labor market entirely just because of how difficult that period of time was.
Yeah, granted, I don't know anybody that worked for the Kaiser health system. I don't know that. I don't have that many contacts over on the West Coast. But when was the last time you talked to anyone in the healthcare system and heard them give a glowing review of the staffing and compensation situation?
Healthcare and educators, teachers, the two people that I speak with that consistently, anyone I talk to, negative feedback about the system, about the bureaucracy of the administration, all negative feedback to just the way that they're being treated as employees.
Yeah, and a lot of them make good money, and what it comes down to is it's not about the money, but you can understand the frustration, right? If your job is to provide good health care. In almost every nurse case that I've ever met, they genuinely care about their patients. Same goes with the doctors. I think nurses sometimes are a little bit better about expressing, no offense to some of the doctors out there, but genuinely care about their patients. And they're constantly getting injured. They're constantly being pulled in many different directions. And very frequently these days, they're being asked to work next to a traveling nurse who might be making 3 times as much as them, because that's what the hospital network needs to do just to fill the job for the time being. And you can see how frustrating that can get over time.
The nurses, to me, are the backbones of these hospitals. I'm obviously biased because I have clients that are nurses, but also my son was in the NICU at Brigham and Women,
Sure.
and just the way that they treated him and us during a time that was concerning, and everything worked out totally fine, but you just really got to see on a day-to-day basis how significant the work that they do is. So I'm always going to kind of lean that way with the bias, because I just think it's so important. And oftentimes with the labor process, you're blown away by how really involved they are in the process. That doctor is kind of cruising around to a lot of different places. And so if you have the leverage, this is what a recurring theme is, and we're going to talk about another strike in a moment. This is the time that you have to put your foot down and strike and demand for higher benefits, because in 2008 or situations like that, you better believe you're not going to be able to go out there and strike and demand better working conditions.
Yeah. Kaiser, by the way, massive. If anyone's not familiar with them, I know they don't have much of a presence, really anywhere on the east side of the country, but the system serves 12.7 million members, 40 hospitals, 620 medical offices. In addition to the West Coast, you've got Colorado, Georgia, Hawaii, Maryland, and Virginia, and they count approximately 213,000 employees who are not physicians. So massive health network to be experiencing this type of walkout and strike. And this isn't always the perfect way to measure this, but I do find this statistic interesting. Through August of this year, the United States has lost more workdays to labor disputes than any full year since 2000.
Wow.
So again, not a perfect way to describe that, because clearly, union membership has been declining over time, and so you would expect this to be a, less frequent statistic to come up.
True.
But what that's looking at is the total number of strike days multiplied by the total number of striking workers, and through August already, we're on track to be at the highest rate since 2000. That is a substantial number of labor disputes that we are looking at this point in time.
Inflation in a hot job market, those are some of the ingredients that you perhaps fuel what we've seen here on the strike side of things.
And I think a lot of it, too, has to do with these are still, I think, ramifications of the financial crisis that are burning their way through the labor system still. Like you think about the UAW strike, which we're going to talk about next. And a lot of the dispute is, hey, you took away a whole bunch of benefits from us when you went bankrupt back in 2009. Now you've been raking it in for a few decades. Let's get those benefits back. And so you're seeing a lot of that too. But speaking of the UAW, there's a piece from the Wall Street Journal today about the strike and what the real objectives are and what the real pain points have been so far. And they make the argument that compared to other strikes, while this one's been getting a lot more publicity, in terms of financial harm to the companies, hasn't been all that significant yet.
Well, part of this message can get a little blurred because some of these companies have reported earnings, but to be clear, they've reported their third quarter earnings, which those were strong off of the heels of what was a miserable year in 22 for the auto manufacturing market and for auto sales here. But at this point where we stand is 25,000 workers are now picketing at General Motors, Ford, and Stellantis across the Midwest, or about 17% of the company's unionized workers. So 17% of the workers currently on strike. It's a meaningful and notable amount being on strike, but it's not 100%.
Yeah.
And
it's just a different strategy. They make the example that in 2019, when GM factory workers walked off the job, the company lost an estimated $1 billion in the first 2 weeks. It's estimated at this point in the first 2 weeks of this strike that GM's only lost about $200 million. Now, they're also striking at Ford. They're striking at Stellantis. So you add that up and you're getting towards the overall scope of the previous strikes. But nonetheless, it's been this, well, just a very different strategy, a slow burn type strategy, trying to get a lot of media attention, trying to get, political pressure on their side. And to this point, I think that part of it's working, right? You had both Biden and Trump visiting the strike sites and in different ways, obviously. But in a lot of ways, that seems to be working. But if it's not causing real financial harm to those companies, you do wonder about their ultimate willingness to negotiate. But tomorrow being a Friday, in addition to the jobs report, the trend recently has been that UAW President Sean Fain goes on Facebook Live and talks about which new plants are going to be part of the strike now. So I suspect, given that we haven't heard anything resembling good news on the negotiations, that we'll see another few plants joining the strike and a few more thousand workers off the job tomorrow.
Yeah, right now these 5 factories that are on strike, that accounts for about 16% of the vehicles produced in North America. And to your point, it seems as if Fain has articulated that his strategy will be to gradually turn up the heat. So perhaps tomorrow we hear that in addition to 5 factories, that several more are going to go on strike heading into the weekend.
Let's take a quick break here on the Financial Exchange, but when we come back, we've got trivia for you right here.
Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction. It can also reduce the possibility of creating any income tax issues on your acquired minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. So call Cushing & Dolan today. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I'm no stranger to the military community. My late uncle, Albert Warner, served proudly in the 1st Marine Division in World War II and gave the ultimate sacrifice for his country. I am surrounded by a family of disabled veterans, including my father, Victor, and brother, Timothy. I am a veteran, and I have dedicated my business and my life to helping veterans. My company, Veterans Development Corporation, works to help disabled veterans every day, and it's one of the key reasons why I'm such a big supporter of Dan Stack and the Disabled American Veterans Department of Massachusetts. I am so thrilled to be proudly partnered with this year's DAV 5K.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Yeah, IRAs are difficult to deal with, but many options. The best option generally is if you're married, husband and wife, whatever, the spouses can be each other's beneficiary. And that's how you normally do it. However, if you happen to be over or at age 73, which is the required beginning date for minimum distributions to come out, and you're doing estate Medicaid planning, and you have an irrevocable trust, you can also have a testamentary trust built into your will. If you do that and you meet those two requirements, then you can name the estate the designated beneficiary of your IRA. And under the new Secure Act 2.0, it allows you to do this without causing adverse required minimum distributions, and it will allow you to protect the assets immediately from the nursing home for the surviving spouse and shelter it for estate tax purposes all at the same time.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary by calling 866-848-5699. That's 866-848-5699. Or you can request your copy right at their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. For your chance to win our daily trivia contest, text us at 617-362-1385. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Fall is here. Now's the perfect time to get a head start on your next vacation. The U.S. Virgin Islands are the top Caribbean destination so far this year, according to Travel Pulse. Explore St. Croix, St. Thomas, or St. John and enjoy incredible beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com. Do a little bit of trivia here on the Financial Exchange, and it's brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. That's eating good in the neighborhood, void where prohibited, dine in only. On this date in 2011, Steve Jobs passed away after a lengthy battle with pancreatic cancer. Jobs famously co-founded Apple in 1976, then went on to found Next Incorporated in 1985, and then purchased the company that would become Pixar in 1986. I didn't know that. Not sure how many of you people know this, but Steve Jobs did eventually return home to Apple. Trivia question today: what year did Steve Jobs return to Apple? Once again, what year did Steve Jobs return to Apple? Be the 8th person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that gift card on tomorrow's show. 617-362-1385, and the 8th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Paul, Tucker, how many vehicles have you personally, or I guess assisted with, maybe with a spouse, the purchase of over the last, since you've bought cars? I think I've got 3. 1, 2, 3,
4.
4.
4.
Used versus new. How many are we talking? Tucker, I'm sorry, I didn't give you time to
respond. It's okay. I'd say like 5-ish.
Used versus new. How many we got here? I bought my first new car ever last year, actually.
Well, I mean, do leases count, I assume?
Yeah, lease counts.
All right, so another 5.
Okay.
Three of the 5 were new, leased. The last 2 that we bought were used.
Okay. So
we got another one coming up. We got to figure that out.
Yeah, good luck.
Lease is up in January, and we're like, should we just buy the car? I don't know.
Wall Street Journal has a piece out today, which is why I bring this up, about buying used cars, which might be a process we all get more involved in over the next few months, given that new cars are going for nearly $50,000 on average. So for a lot of folks, used car is the only type of car to be reasonably affordable out there. And they've got a few tips on there in terms of, steps to take if you're evaluating used cars. Some I agree with, some I'm not so sure about. But, I mean, obviously the first one is like, hey, does a used car actually make sense in my case? Like, should I repair my old vehicle? I was talking to a Toyota service manager yesterday, and just, it's funny because I hadn't really thought about it, but he's brought up that his job is the most recession-proof thing in the world because nobody buys new cars if they lose their job. So he, a service manager at a Toyota dealership, has been busy as ever recently with the number of repair jobs that are in, primarily because of the cost of new cars. But yeah, I think evaluating, hey, do I genuinely need a new car versus a used car? What am I looking for? What's my budget? Will help determine which direction you go there. Obviously thinking about mileage. When you bought your used cars, like, where did you start? Because this makes the point that, hey, go to a dealership first rather than online. And I got to say, I can't help but disagree more with that first statement there of start at a dealership instead of going online first.
I was in a unique spot where a family friend owned a couple of used car dealerships, so I felt relatively secure that they would look out for my best interests. But
turned out they sold you a lemon. Yeah, been there.
Well, actually, the smoke smell in the car never really
Your neighbor was
away.
the father from Matilda, played by Danny DeVito. I understand.
But I hate the car buying process, absolutely detest it. So the idea of going online, to me, I'm not against it. And in particular, I'm not someone who really cares about the bells and whistles. So the idea of going into a dealership doesn't really appeal to me too much, but I understand that there is perhaps something to be gained by checking under the hood, quote unquote.
Like, I'm not a proponent of buying a car on Craigslist. That's not necessarily what I'm saying here. But like, for me, when I get to the dealership, I want to go in there armed with as much information as possible, because I know that I'm going to get laid on the sales job the second I walk into that place, pushing me into a vehicle that I know nothing about if I haven't researched it online. And so where I start the process is I go to a place like Auto Trader and I'll go like pull up, all right, this is how old of a car I'm willing to look at. This is the maximum price I'm looking at. And these are the features that I need. And then from there, at least I have a sense of what one of these things should cost.
What's reasonable.
Right? Like, they've got the prices right on there. So at least I know where I'm coming in and not to be swindled if I go walk on a lot and get talked into some other type of vehicle. So granted, the person they were interviewing about that piece of advice works for J.D. Power. And so, Tyson, what was his name? Tyson Jomini, said consumers are loyal to their brands. So they tend to trade in their vehicles where they bought their car. And that might be true. So ultimately buying from a dealership, but from what I understand, J.D. Power makes almost all of their money from the dealerships and the manufacturers. So there might be a little bit of an incentive for him to recognize that maybe you should be buying your car at the dealership rather than some guy on Craigslist. I don't know. Like, I've sold a car on Facebook Marketplace before.
Oh, really?
And good experience, but from the person purchasing it, like, you better know how to work on cars, because otherwise, how the heck do you know what you're getting?
Oh, no question about that.
Yeah, so it is an interesting time to buy a car. We Americans are just one of the things that I think we're worst at when it comes to evaluating our financial ability to make a purchase. Our cars are just...
It's a weak spot for a lot of people.
Oh, my God, way too expensive.
Particularly now with the borrowing cost piece. We've talked about interest rates extensively on this show and many others. You're now looking, as we've looked before, 8 or 9% on a new car.
Don't matter. They're just going to extend the loans out to 10-year loans now instead of 7-year loans. Like, all right, like, that's what's going to happen. Oh, no, you can still afford the car. We'll just give you a 15-year car loan. Yeah, pay it the same way you would a mortgage. Good luck. Let's take a quick break. When we come back, we'll have the trivia winner for you next.
Org. It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Spouses generally serve as the beneficiary to your IRA or life insurance policy, but naming your estate the beneficiary has quite a few benefits. Your goal is to protect your assets from probate and the nursing home, and by naming your estate as a beneficiary, you can avoid the probate process, lessen the chance of creating any income tax issues on your RMDs, and enjoy enhanced estate tax reduction. Call Cushing & Dolan right now at 866-848-5699 and ask for their brand new guide called Why Name Your Estate an IRA Beneficiary. Learn about these benefits and others and provide peace of mind for you and your family during your retirement years. Call 866-848-5699. Or you can request the guide online by visiting our website at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The vibe like no other is back. The United States Virgin Islands, one of the top-rated destinations in the Caribbean, is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That could be up to $1,000 savings for a family of 4. Act now, because travel must be completed by December 31st of this year. Go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023.
This is Tucker Silva of the Financial Exchange, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. Today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
Great question, Tucker. Qualified retirement plan assets are difficult to deal with in the estate planning world. They're that round peg that you try to put in the square hole. It just doesn't fit well. Why? They have both income tax components associated with them and estate tax components, right? They are includable in your estate. However, if you wanted to put your IRA into a trust, into this irrevocable trust, you cannot do that. And not only into an irrevocable, you can't put it into a revocable. Why? In order to do that, you would have to take the IRA and liquidate it, pull all the money out and put it into your name, subject it to income tax, and then put possibly 40% less into the irrevocable trust. So that's why it's difficult to protect IRAs in advance from the nursing home. However, you could name the designated beneficiary of the IRA, the irrevocable trust, as part of your overall estate planning process. So that can be helpful. But it is a tough part of the estate planning world.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699 or request a copy at legalexchangeshow.com. Once again, 866-848-5699, or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Trivia question today was, what year did Steve Jobs return to Apple? That would be 1997. Jobs sold his company Next Incorporated to Apple for $400 million in December of 1996. Jobs regained control of the company in September of 97 when he was appointed CEO. And, did pretty big things, I think. Chris from Stratford, Connecticut, taking home the Financial Exchange Show t-shirt, and he's also registered to win a $100 gift card to Applebee's, which we'll give away on tomorrow's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now that's eating good in the neighborhood, void where prohibited, dine in only.
The tax cuts that were passed under Donald Trump in 2017, not going to get into the deficit, were they worth it conversation here. I happen to believe that it was the wrong tax package at the wrong time, but nonetheless, they've been quite popular. They are due to expire in 2025, or at least the majority of them are. The way this worked was, in order for the Republicans to pass it, they need to come under a certain amount of deficit spending, and in order to do that, they said, okay, we're going to make the corporate tax cuts permanent. That piece I happen to agree with. I think if you want to keep companies domestically headquartered, you need to be competitive on corporate taxes. But in order to do that, we're going to phase out the personal income tax cuts. Now, to remind folks of what these were, we brought the brackets down for just about every bracket. So the 15% went to 12, for instance. The 25 went to 22. And the biggest piece was that the 39.6% top income tax bracket went down to 37%, which was a pretty substantial tax cut for anybody pulling in, $500,000 or more as a household. But if Congress doesn't act, all of those are due to sunset, expire, and those rates go back to pre-2017 levels. Now, both parties have said that they don't want to raise taxes on them. Well, Republicans have said they want to make these tax cuts permanent. Democrats have said that they want to extend them for the majority of Americans, certainly not the 39.6. But it does bring up an interesting question that, given that Congress can't even elect a House leader or keep one for more than a year, what's the likelihood of any action getting done on taxes to make these things permanent? I have to say that I'm not sure it gets done. So what do you look at doing before these tax cuts expire, I guess?
One of the things to take a look at, and obviously consult with a professional tax consultant to make sure that it's viable, but is the idea of Roth conversions, particularly if you find yourself falling in that 12% bracket that is going to go back to 15% in 2026 once these expire. You're able to take money out of your IRA and pay the taxes up front at these lower levels and put it into a Roth, never to be subject to taxes again, as long as you meet a 5-year waiting period on earnings and things like that. But if you have the liquidity in other accounts, in bank accounts, to be able to pay for that taxation, perhaps paying at those lower rates is something worth considering depending on where you find yourself. Yeah,
the other pieces are very much, hey, you've got to have a lot of net worth for this to make sense. But the estate tax limits right now are sitting at nearly $13 million for individuals and $25 for a married couple. And should that get rolled back, which I think is really likely, right?
Mm-hmm.
Like, you're talking about a very small portion of Americans who are subject to this, then you are closing in on some key dates to get some things done to take advantage of those high rates while they're still up there. You know, maybe you own a farm or a business that has some real value to it. You can be suddenly faced with a much higher tax bill upon your passing when these most likely phase out in 2025. At least that's what the law states today. So a lot to take a look at, and definitely something to pay attention to as they close in on the last few years here. And like Paul said, definitely want to consult probably attorneys, tax consultants, and financial advisors before doing anything on that.
The vibe like no other is back. The United States Virgin Islands One of the top-rated vacation destinations in the Caribbean is making it nearly impossible for you to turn down booking a trip to St. Croix. For a minimum 5-night stay at participating resorts, you'll receive a $250 air credit per person over the age of 16. That's up to $1,000 off for a family of 4. Act now because travel must be completed by December 31st of this year. So go to visitusvi.com and use the code VIBE2023 when reserving your spot. St. Croix is known for its incredible history, world-class dining, gorgeous beaches, casinos, and golf. Winter is coming to New England, so visit usvi.com and head to America's Caribbean Paradise. Enjoy the island of St. Croix and all it has to offer. Go to visitusvi.com and use code VIBE2023. Plan your dream vacation right now. That's visitusvi.com and use code VIBE2023.
The just poster child and everybody's favorite crypto guy has started his first day of trials here. Sam Bankman-Fried and the FTX trial is now underway. And it's been interesting just in the first day to hear the different attorneys talk about him. Obviously, the defense attorneys are referring to him as Sam. He got a handsome haircut and trimmed down that big mop, and they're trying to really humanize him, whereas obviously the prosecutors are referring to him as Mr. Bankman-Fried, and trying to lay out the admittedly immensely complex situation that was FTX and the theft that occurred from the platform, or the alleged theft that occurred from the platform by its executives. It is going to be... It's going to be honestly a challenging trial, because explaining what all of this was and how it occurred to you and me has been challenging, right? Like, we've had to read quite a bit to understand what's going on here with market makers and the wallets. Explaining that to a jury that, you know that anybody with any expertise on this was already thrown out of the jury for bias. So breaking that down and how this actually occurred is going to be very complex. I think far more complex than, say, a Bernie Madoff situation where it was pretty clear how it all occurred.
Is it really that complex? Because I would just take it from the standpoint of he took on customer funds for his platform, FTX, and used them for his own personal benefit or his own personal objectives that perhaps they'll make the argument that were for the betterment of the company. And that's clearly what his lawyer continues to be pushing in early trial dates here. But ultimately, if you're purchasing luxury real estate and some of these other things, political contributions, things like that, I perhaps you can make that the spin, but I think that's back on that notion a little bit.
I think that's what they're trying to do, is just make the situation so complicated, make the theft so complex that, oh no, it was transferred from this corporation to that corporation. Yes, that corporation ended up buying a beautiful resort in the Bahamas, and ended up using it to pay a bunch of politicians and Tom Brady. But those, that wasn't personal use. He was just trying to better the company, and maybe they didn't have good controls in place, but there was no rules on the book, no laws on the book that prevented this from happening per se. So I don't believe what I am, I do not believe what I am saying to be the case. Like, I believe that this guy ripped off his customers and was running what amounted to a giant theft. But it is more complicated than the pure Bernie Madoff was very clearly doctoring statements. And
his was the simplest Ponzi scheme in history, because they were they were making up, fraudulent trades, and that was incredible how they were able to recreate these returns. But ultimately, the money was just sitting in one bank account. Yeah. That was the simplicity of it. That's what I'm speaking to. But ultimately here, you don't have to be a computer code specialist to know that if they can prove, and maybe that's where the tricky part, Mike, lies, is that if they can prove that he used some sort of backdoor coding, whatever the specifics of the coding was, to siphon off customer funds elsewhere to something that was used for his own personal gain, that's where you have your case. But I guess I agree, if you tie in computer coding, you can make it more convoluted.
Well, and, it's not a SEC registered domestic firm here that follows some sort of basic accounting principles, right? You're talking about offshore companies located in multiple places using what is defined as a decentralized system to
playing by different rules. That's fair. That's fair.
It is by its own nature more complex. But there's always Ponzi schemers out there, and that certainly seems on the surface to be what happened here. So the trial just got started, and will continue, and really is kind of an important turning point for the industry as a whole, right? Like, since this arrest and since this collapse, I haven't heard politicians talking about it. I haven't seen any ads. You've seen nothing in the space other than the SEC saying they're going to crack down further on it. And so this trial and whether or not this guy gets found guilty and goes to prison over this is kind of a defining moment, I think, for the industry as a whole, whether or not they can actually move anything forward.
People who work in the crypto space, we were reading a piece the other day, want punitive damages to be assessed against him just to put this behind them and try to move forward to clean off the reputation of the whole market, which is going to take years to do. But I think they would rather see that than him getting off scot-free.
Good luck. Quick break here. When we come back, going to have some stack roulette for you on the Financial Exchange.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. Veterans Development Corporation is proudly partnered with this year's DAV 5K Boston. Let's meet their CEO, Mark Vonner.
I served proudly in the Marine Corps from 1981 to 1984 and was honored to receive the U.S. Marine Corps Expeditionary Medal, one of the oldest decorations still issued to active duty personnel. I started Veterans Development Corporation to give back to the veteran community. Many of my employees are former veterans, and it is my distinct pleasure to work with them each and every day. This is why I'm so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K. If not for the DAV, many of our disabled veterans would not have access to critical services that they need to live comfortably. I hope that by telling my story, many more of our veterans will achieve their goals and dreams post-service.
Veterans Development Corporation is proudly partnered with this year's DAV 5K, taking place on Saturday, November 11th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston. Beneficiary designations are critically important if you want your assets to be distributed efficiently and protected from probate or the nursing home. Naming your estate the beneficiary of an IRA or life insurance policy can offer significant benefits that include avoiding the probate process and enjoying enhanced estate tax reduction. It can also reduce the possibility of creating any income tax issues on your required minimum distributions. Call Cushing & Dolan right now at 866-848-5699 and ask for their new free guide called Why Name Your Estate an IRA Beneficiary. There's nothing more important than protecting your assets and providing lifelong comfort for your family. So call Cushing & Dolan today. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Required minimum distributions are a critical part of your retirement planning. The laws regarding these distributions has changed with the passing of the Secure Act 3 years ago, which means if you don't withdraw the proper amount when you're supposed to, you could face a 50% tax penalty. Hi, this is Susan Powers from the Armstrong Advisory Group, and we don't want you to make that mistake. Let us help you learn about RMDs and how they work so that you can avoid these tax implications. Our firm has a brand new guide available right now called Understanding RMDs. In it, we'll walk you through the steps of calculating your RMDs so that you withdraw the right amount at the right time. Call us today at 800-393-4001 and get your copy of this new free guide, or request it right now from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Winter is coming, and before you know it, the sun will set at 4 p.m. and the frosty chill will be back in the air. It's time to plan ahead. Get out of the cold and into the sun in one of the most fabulous vacation spots in the Caribbean, the U.S. Virgin Islands. Enjoy world-class cuisine, picturesque beaches, rich history, and spectacular weather all year round. Whether you're going for a romantic getaway or a fun family vacation, the U.S. Virgin Islands has everything you need to enjoy an incredible vacation. Travel from the Northeast could not be easier, and there's no money to exchange or passport required. America's Caribbean is St. Croix, St. Thomas, and St. John. Visit one or all three. Paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. Visitusvi.com. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Time for some stack roulette on the Financial Exchange. Paul, what do you have for us this morning?
False advertising suit against McDonald's and Wendy's is dismissed. You'll never guess what some American was complaining about regarding Wendy's and McDonald's. He was accusing the companies of exaggerating the size of their burgers. Ha! The horror. And
what can your possible damages amount to on this, right? Like, let's say you ate McDonald's every day for years. Even if they had overstated the size of their burgers by some amount, what are you looking at? Like $50 in reimbursement? God, I hate our legal system.
The lawsuit had sought unspecified monetary damages, quote unquote, fully compensating all individuals who were deceived by the defendants and as a result purchasing an overstated menu item. Just
if you sue somebody over this, then you should be responsible for paying McDonald's legal fees for when you lose this stupid case.
Couldn't agree with you more.
Unbelievable.
It gets the riffraff out of the court systems because there's a lot more important cases that should be heard rather than this case. And I read recently, we covered on one of the shows, that the hot coffee thing was coming back.
Oh, yeah, the lawsuit of the hot
they were
coffee.
coming at that again 20 years later. It's just a company country that loves lawsuits left and right. We're just always looking to get after.
Wow, congratulations to McDonald's and what was it, Wendy's that successfully defended themselves in court.
When we were kids, the bubble tape that was supposed to be 6 feet long. We always had this theory
measure it out.
We never did it, but we wanted to measure it out and sue for false advertising. That never amounted to anything. Maybe it is 6 feet. I'll never know.
Never know. Well, it's still.
Or I could just pull out a tape measure and just take care of it.
You can just do it. We'll do that next week.
I'll leave it to be.
We'll do that next week on the Financial Exchange. Uber is introducing something that I have no idea how they're going to make any money on, but they're introducing package return services. You'll apparently be able to return packages for $5 or less. Basically, call an Uber to take your package and drop it off at, I guess, the UPS store or wherever else Amazon accepts deliveries. I don't really know how you make money on this. I suppose Uber has enough data on their drivers to know when they are driving through a neighborhood where there might already be somebody looking for a package pickup. And so if you're that flexible, then maybe it is somewhat easy to do. But it did bring me to an interesting question. Like, why? Amazon's at my house 4 days a week. Wouldn't it seem pretty easy for me to just put the package on the front door and be like, hey, I'm returning this, Amazon guy. Can you maybe take it back to the warehouse that you're traveling back to in the next 30 minutes? That would seem like a pretty low cost and very customer-friendly service to be able to provide.
I know that returns are a huge pain point for Amazon. There were instances previously where they would just say of discarded merch or something that was misdelivered, they'd just say keep it rather than even deal with the logistics of picking it up. I don't know their logistical system enough to say if that is a viable solution.
Because on one hand, they are making inroads to try and make returns easy and more convenient, right? Like you can walk into, what is it, Kohl's, where you can return Amazon products?
Tucker's favorite store.
I did it 2 days ago. I did it.
Tucker's there
Kohl's.
4 days a week.
Huge Kohl's guy.
You can do it at Whole Foods, obviously, or some Whole Foods that have the Amazon lockers. You can do it at UPS stores now. So in some ways, they want to make returns easier. But on the other hand, like, it's got to be one of the biggest price points or biggest cost points of their entire business model of processing returns and making sure that stuff is packaged correctly and returned in good working order. Like that cannot be a profitable piece of their business. So I can see why they might want to make it more challenging and not allow their drivers to pick up returns.
Just to go back to Uber here for a second, to me this screams as a bit of a cry for help or a bit of a panic move, because this, in its essence, to your point, Mike, is not an extremely profitable measure. And to me, what's happened with Uber is that the technology that it did provide was revolutionary and did provide a significant amount of competition in the ride-hailing space. But that was propped up by venture capital and consistent raising of dollars, and they were able to subsidize the cheap rides that you and I took over the years. Now there's much more scrutiny on them making a profit, and it seems like they continue to unveil different services. It's a low-margin business, and to me, none of these really scream tremendous amount of profitability, any of these endeavors. Like this $5 here, it's just something to gain headlines, but I don't really know how it impacts the bottom line of the business.
Yeah, I mean, look, I think I get in some regard, if you are Uber, if you are Lyft, you want to monetize every second that the drivers are out there and every second that you've got a user's face on the app, right? And so the more stuff that you can put into the app, whether it is grocery delivery, meal delivery, or even package return, so long as it doesn't substantially add to your cost, then I can see it. My problem is I'm not sure that their logistics are good enough to actually make this convenient, because what I see happening in all likelihood is Uber drivers being asked to go to neighborhoods that they're not already in to pick up a package for $4 and return it to a UPS store. And unless that driver's already in that neighborhood dropping somebody off, it's just not going to be profitable.
It would make a lot more sense, and I believe it's being launched initially in cities and metro areas,
Sure.
because in the suburbs or rural areas, you can see, to your point, how it would be beneficial to someone who lives out there because they probably have to drive a decent distance to unload the package, but it wouldn't be profitable to Uber at all to go down that road.
But yeah, I mean, I don't know about, granted, we're like old now with kids and we don't do fun things anymore, so we're not the best people to sample, but I don't know the last time I opened the Uber or Lyft app.
Chuck always does this too. And I'm like, Chuck, we're out in the burbs and we're not really
we're not the target audience anymore, I guess.
Outside of us going to the airport, that's really the only time that I consider, or if I was going into Boston for a night and wanted to be, safe and get a ride other than myself driving in. It just doesn't seem, though, as if they found it's just a tough business. It's a really low margin business to be in the delivery space. It's not easy to make a profit.
And no matter how much you want to be, you're not really a tech company. Let's take a quick break until tomorrow's jobs report data that comes out at 10 a.m. Markets are still in negative territory here. We've got the NASDAQ off about 89 points, 2/3%. The S&P off 25 points, 0.6%. Dow off 148 points, approaching 0.5%. Oil prices, though, helping out a little bit, down 1.8% below $83 a barrel. We'll be back at it tomorrow. Everyone have a fantastic day and get some sun in, because this weekend it's going to be rainy again.